This is the only indicator that I use to consistently pull profits from the markets. It's not the RSI, it's not the MACD or any of these retail nonsense concepts that you've been taught. These are the exact institutional levels that my godfather used for 30 years at Goldman Sachs to move billions daily. And once I learned to identify them, my trading transformed from losing money to being consistently profitable. Most traders have 20 different indicators on their chart trying to predict where price will go. I have a few levels that show me where institutional money is actually flowing, and that's the difference between guessing and knowing. By the end of this video, you're going to see exactly what these levels are, how to identify them on any chart, real trade examples showing them in action, and why following institutional flow is the only edge that retail traders need to be consistently profitable. But here's what makes this even better. I am going to show you how I took the strategy and turned it into something that works for me even when I'm not at my computer. Let me start by explaining why the strategy works when everything else fails. 3 years ago, my trading account told a brutal story. I was down around $20,000 using every retail strategy that you can imagine. Support and resistance that did not hold, trend lines that would break every single day, indicators that gave false signals. I'd mark out what I thought were perfect entry points only to watch price blow right through them and act like they didn't even exist. My win rate was around 20%, and even my winners were tiny compared to my losses. I was fighting the market every single day, and I was losing. Then, one morning, my godfather walked into my room while I was staring at my charts, stressed out after losing yet another trade. He looked at my screen that was covered in different indicators and different levels and said, "You're trading like a retail trader. That's why you're losing." My godfather spent 30 years at Goldman Sachs. Not as some junior analyst, he was moving billions of dollars daily on the trading floor. When he saw me struggling, he decided that it was time to share what actually happens inside institutional trading. He pulled up a clean chart, no indicators, just price bars, and said something that changed my entire perspective. Trading isn't about predicting where price will go. It's about following the people who actually move the market. He explained that every single morning, institutions position themselves before retail traders even wake up. They're not using RSI or MACD. They're identifying specific liquidity levels where they can fill massive orders without pushing price against themselves. When Goldman Sachs needs to buy $1 billion worth of something, he said, "We can't just hit the buy button. We'd push price up 50 points against ourselves. Instead, we accumulate slowly at key levels where there's enough retail liquidity to fill our orders." This was completely different from all the strategies I'd learned online and on YouTube. I wasn't supposed to predict breakouts or reversals. I was supposed to identify where billions of dollars were positioning and then just follow that flow. My godfather showed me that institutions focus on a few key levels that retail traders completely ignore. These levels are simply the highs, lows, and opens of previous trading sessions. He explained this to me very simply. Whenever you see an untested high or a low, that's where all of the orders are resting. The reason these levels get swept is because there's so much liquidity around these levels that price almost uses these levels as magnets. These levels aren't just made up, he explained. They're calculated based on where we can efficiently move billions without creating too much slippage. Every day, institutional money flows through the same types of zones, and retail traders are completely blind to these zones because they're staring at indicators and support and resistance levels. He walked me through how Goldman's entire operation works. Before the New York session opens, they've already identified their key levels. When retail traders are still sleeping, institutions are positioning for the day's moves. By the time retail traders wake up and start analyzing their charts, the smart money has already decided when they're going to push price. The beauty of this approach is that it's objective. Either price is at an institutional level or it isn't. Either institutions are showing signs of accumulation or they're not. There's no interpretation. There's no maybe this will work. No emotional guessing. My godfather told me that my job isn't to predict the market. Let's go over a few setups that I've taken based on this indicator. All this indicator is doing is marking out all of our levels for us. It's marking out the New York Open from 8 to 8:15 a.m. Eastern Standard Time, and then the untested levels of the New York session, Asia session, and London session. You can see right here that I took a beautiful trade based off of a break and retest of the New York Open. First thing you do is you mark out the first 15-minute candle from 8 to 8:15 a.m. Eastern Standard Time. Keep in mind, this indicator marks out all of my levels for me, so I just open up my charts and load this indicator. You then wait for 9:30 a.m. Eastern Standard Time, and whichever price broke out to initially is the direction that you are looking to target. So on this day, we broke out to the upside, we got a retest, I entered some longs, and I got out of this trade for a risk reward of 1 to 4, making me around $10,000. The next two trades were very small losses. Keep in mind, guys, taking losses is completely normal, especially if you're using a strategy like this where it's just objective and you either take the trade or you do not take the trade. The only thing that matters is that we are making money month over month, year after year. We then had a small win right here. We entered some shorts. I then took some longs based off of a break and retest of the New York Open right here. Again, this trade ended up not reaching the full take profit, so I did trail my stop loss and get out for a smaller profit of around 1 to 1. We then took another break and retest trade, this time to the downside, and on this specific trade, we also did not hit the full take profit, so we ended up trailing our stop loss once again, giving us a nice little profit. Guys, there's nothing wrong with trailing your stop loss and just taking profit, right? A lot of you guys, you let trades that should be winners turn into losers, and that's why you're unprofitable. This next trade is a beautiful example of liquidity and just how powerful it is. So right here, we have an untested untested Asia high, and we also have an untested New York high. When we have two highs that are next to each other, they often act as a zone. So think of these two levels as one big supply zone or one big bearish zone. I saw price approaching this level. I got into a short when I saw that it was not able to break above this level on the 15-minute time frame. This trade gave me a risk reward of 1 to 4. I was risking 12 points and I made back 44 points. This is why it does not matter if you take small losses here and there, guys. When you have a big, fat, juicy trade like this, it covers the last 5 of your losses and then some. All right, guys, this is the last example that I will show you. This is a beautiful break and retest trade that we took to the upside. As always, the first step is marking out or having your indicator mark out the first 15-minute candle from 8 to 8:15 a.m. Eastern Standard Time. We then broke out to the upside, meaning we are looking for a retest of this zone, and we are getting in longs when we get that retest. We got into some longs right here. Keep in mind, I fully automated this strategy. My indicator actually marks out these setups for me, as you can see right here, so I know exactly when to get in and when to get out of these trades. Keep in mind that I have fully automated this strategy, so I don't actually have to sit behind my computer while these trades are being taken. The algorithm does not care if I'm watching, it doesn't care if I'm confident, it doesn't care if I'm scared, it just executes. Goldman's strategy is based on objective criteria, and the results speak for themselves. Now I'm going to show you a back test of this algorithm so that you can see for yourself if it's profitable or not. Here are my results over the last 3 months using this strategy so you guys can see that it's actually performing in the recent market conditions. We have a profit factor of 3. We are 54% profitable. We've taken 42 trades. We can go through all the trades that this algorithm have taken, and you guys can see that with this algorithm, we take small losses. The key thing with this algorithm is that it's optimized for high risk to reward trades, meaning trades where we're risking a little bit of money and we're making a lot of money back. This means that our average losing trade is around $1,200 and our average winning trade is around $3,000, with most of them being around $4,000. You can see that the last trade we took a $1,200 loss and we won $4,000. Small loss, won 1,000, made 4,500, made 575, took a super small loss, another small loss, then we won 4,000, won $425, small loss, won $4,000, won $775, and it just keeps going in this order. Small losses, big wins. And the key thing that you guys need to understand is trading is not about each individual trade. It's about your performance and your statistics. This algorithm is also optimized for amazing risk management. You can see that our biggest losing trade was only $1,200 and our largest winning trade was $4,500. So we will never have any revenge trading or anything like that because we literally can't emotionally trade if we tried to. Here's the P&L curve trading over the last few months. Keep in mind, this is if you're trading on a few contracts. Some of you might be trading on 1 contract. Some of you might be trading on 10 contracts. The first trade was a win, so the account was up $4,200. Second trade was a win, we were up $3,000. Another win, then we had a loss, really small loss of $1,000, and you guys can see we just keep climbing, and we finished the account up $36,000 in the last few months. Now, the most important thing to me personally is my time, and that's exactly why I automated my trading strategy. When I first started trading this system, I was trading for 2 to 3 hours per day, sometimes a little bit less, sometimes a little bit more. Now I wake up, I make sure that my algorithm's running. Every now and then I'll mess around with something in the settings, but I usually just let it do its work, and I get to obviously enjoy the results that the algorithm gives me. But more importantly, now I have complete ownership over my time, and I can spend it with my family, I can spend it going fishing, and overall just doing what I want to do. That's the beautiful thing about algorithmic trading. And since I am so confident in my algorithm and exactly what I have built over the past 7 years as a trader, I will completely guarantee your success using this product if it's something that you're interested in. That means if it doesn't work for you, which it obviously will, but if for some reason it doesn't, you get a full refund, money back. There's no personal risk to you whatsoever. So if you're ready to stop trading manually and start using a proven systematic algorithm to execute your trades in your broker account or your funded account without any human intervention, click the link down below, and I look forward to helping you implement my system into your personal trading account. You could have a fully running and automated trading system inside of your broker or funded account extremely quickly. But we do have limited spots and we don't accept everybody. We need to make sure that you're a good fit because we offer such a crazy guarantee. We need to make sure that you are actually going to use the software properly and going to be someone that we want to work with long term. So click the link down below to apply to get access to this software, and I look forward to speaking with every single one of you all. Thank you for watching.